What is the difference in the ETF and buying direct share or buying direct stock? The ETF, exchange traded fund. Each of us we have different tolerance of risk. It kind of make you kind of want to choose very much conservative approach into investment, and that is why I'm bringing ETF, which is a pool of companies in a packet. You are owning a piece of each company in that pool. So just to minimize your risk, that's how you buy ETF. Hello and welcome back. Today I'm bringing I'm asking a question. What is the difference in the ETF and buying direct share or buying direct stock? The ETF, exchange traded fund. What is the difference between that and us buying a direct stock of a company? ETF kind of it minimize your risk. Each of us we have different tolerance of risk, especially if your age, depending on your how close are you to your retirement. It kind of make you kind of want to choose very much conservative approach into investment, and that is why I'm bringing ETF, which is a pool of companies in a packet, in a bowl, in a company. So when you buy such company, when you buy such share of that ETF company, you are owning a piece of each company in that pool. Because you cannot balance the weight out. It's kind of weighed out. Your loss will be minimum, very minimum, compared to if you have single-handedly bought that company. So that is the ETF. ETF is a pool and numbers of company together, and buying it give you the opportunity to own each company, a piece of those company in their pool. Compared to when you buy a single one, if anything happen, if it goes way up, then you up. But if it goes way down, then you lose a lot of money compared to the ones that is a pool. So like all of our indices, like Dow Jones and S&P 500 and NASDAQ, those are all pool of companies in there, and they all have ETF too. Exchange traded fund. They all have it. So just to minimize your risk, that's how you buy ETF. Now, if you look at what people are doing, getting close to their retirement, they try to be conservative, and that is why I'm bringing this to us today. This ETF, it has a small scale, it has a medium, and it has a large cap ETF. So, which means some of the ETF is a pool of medium companies, and some of it is a pool of large companies in the ETF, in the pool of the ETF, and some of them is just small cap, which is maybe less than $2 billion market cap on those companies in that ETF. So I'm bringing this fund start grinding ETF to us. It's divided into three different ETF. The first one is the large cap. You can see it started. Let's see today. Today is 25.80. Up by 0.78%, 20 cents up. But if you look at it, it started up low and high, and then it dropped down like this. So let's look at the 6 months. You can see the 6 months has been up and down, then down. It's going back up. Like I said, the ticker symbol is GRNY. GRNY. That's the first one, and it is a large cap. And the second one, GRNJ. GRNJ. So it's contract grinding small. This is a small and medium cap. It's a small and medium cap. Like I've said, this ETF give you the opportunity to minimize your risk. It's advisable for you to be more conservative if you are getting close to your retirement, or if you think you can, your tolerance or your risk tolerance is very, very small. So you go into ETF companies. You go to ETF investment. So that way your loss will be minimized, and your gain will also be minimized because you are very conservative. Like I've said, it's like buying ETF is like buying Kroger and Walmart and Costco and Publix together in the same pool. They are all retail, food retail, and that is one ETF. I'm just using it as example. That's one ETF. Or you can go into automobile, auto. Yeah, you buy Toyota, you buy Audi, Lexus, you have Nissan, and all those. That's another ETF, and that is how ETF are set up. Some ETF is just full of all is based on the market cap of those companies. It might be average of about $10 billion, market cap. It can go all. So we have different sector of different ETF. Even the indexes have have a ETF, like VOO, so it's, that's the ETF. It's different. And the last one is fund strat granted. This is a large cap income ETF. Of course, today this is what it is today, $20. The last 6 months, let's look at it. It dropped down here, and now is finding its way up. And the year range is 19 to 21. Like I've said, they're just starting out. They're just coming out. The market cap is not even, didn't show the market cap here, but the market cap for this is about 31 million. I didn't see it here, but I have it on my document. It's 31 million. So either way, we have to kind of understand what we are going for. Of course, investing, you can invest money that you need right now, and we most of us, we need, or if not all of us, we need the time, especially if you don't have that much money. You need time to get and take a position in a company or in an investment. So time buy you what you don't have, which is possibly you don't have enough money, but you have enough time to get in and take a position and wait on it and see what it does. So ETF is something that you might want to look at, and that is the purpose of ETF fund or ETF shares, for you to minimize your loss, and also the single one, seems for you to kind of do your investigation and do your research. So that is why people go for ETF sometimes. For you to invest, you cannot just invest blindly. You have to know the company. That will help you to kind of make decision either to invest in this company or not. But most of us, we don't have that time to do all those research, and that is why this is an alternative. Is good for us. It's okay, if we can do all that research before we make a decision. We can just go to a ETF that will kind of balance our risk out and minimize our losses. And at the end of the day, we don't understand why we're losing money or why this portfolio keeps going down. It's because we don't do the research. And so if you don't have the time to do the research, it's okay for you to go for ETF, which kind of weigh things out, and you will be very conservative in your investment. Yes, you might not make as much money as you would have if you have bought some well researched single company, but at least you are not losing that much. And that is why I'm bringing these 3 ETF to us, for us to do our research. Now we have to do our research to make sure that it fits our needs, it fits our requirement, it fits our portfolio. Thank you for joining me today. If this is your first time, like I've said earlier, I would like to invite you to join us and share your own information, and also comment on this video. Until I see us all in the next video, I say have a wonderful day.